a market that's challenging, I think, weeds out some of the competition. If you're here and you're operating and you're doing it the right way for the long haul, I think it kind of puts up some barriers to entry that can provide a competitive advantage for those that can do it well.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Joe Smazal is the most active broker in the sale of $2 million plus apartment buildings in Chicago. Joe, welcome to the show.
Good to be here, Sam.
Thank you so much for coming on today. I appreciate it. Joe, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
As it relates to my life, I started in Iowa. I'm in Chicago, and I got here because of the job of my wife. As it's with my career, which I imagine more of what you're asking. I started selling middle market size apartment buildings on the northwest side of Chicago, and Jefferson Township was the submarket of focus. I got there from a couple years in medical sales that I just didn't really see as a long-term career for me. Enjoyed it, but just wasn't a fit for what I wanted to do in 5 or 10 years down the road. How I got here and being the most active in the space where I work is staying really focused on that niche and not chasing deals or not chasing other kind of distractions along the way.
Got it, man. That's really, really cool. You're a broker, but you also own apartment buildings there in Chicago. Is that right?
Yeah, I do. My bread and butter, the way that I provide for my family is very much still from brokerage. But over the course of the last few years, I've tried to acquire a small building or two, and it's allowed me to be a better broker. I certainly understand what my clients deal with a little bit better, and I believe in what I do. I think it's a great vehicle for long-term investment for my family. My wife and I manage them together, so that's kind of been fun, and it's gone well. I intend to do it for the long haul.
Man, that's really, really cool. Tell me, I guess, what the opportunity is right now. I mean, you have people buying. Obviously, there's transaction volume, but what's the opportunity that you have now, maybe that we didn't have a year ago, if there is such a thing?
Well, I'd say that we're dealing with sellers that have a little bit more conviction to sell. In Chicago, we didn't have the run up that, and I know this is a national show, so if I talk too much Chicago,
no, this is why you're here on the show, is to talk Chicago, because we want to hear exactly what's going on in your local market.
Cool. Well, in Chicago, a couple of years ago, folks were griping that we didn't have the same rent growth and population growth and such as some of the Sunbelt markets did, or some of the more popular markets did. And, Chicago is looked at as kind of boring. Now, I think that folks look at the last few years in Chicago and say that Chicago has been much more stable compared to some of those markets. And, we never had 3 caps, 4 caps, unless something was really, really prime, we were selling generally in the 5s on the north side of the city. And we're still right there. And we've had a ton of rent growth here, really strong. We have a very seasonal leasing season because the weather sucks in the winter. And the beginning of the leasing season was really strong. So we've seen folks kind of come back that left Chicago to explore some of these other markets. And then the folks that have never left seem to be kind of doubling down and encouraged by the operations. In terms of the opportunity here, like I mentioned at the beginning of that ramble, we've just got sellers that have a little bit more conviction, kind of circumstantially. In some cases, that's just a loan maturing, or a loan that had been floating, or a partnership or a fund just kind of run its course. And so we're starting to see the inventory open up a little bit here this spring, and really good real estate at prices that I think make sense.
No, that's really, really awesome. And you said that things are on average, you think are still trading in that 5 cap-ish range?
Yeah, I'm it's funny, I mentioned a cap rate as the way I refer to pricing, but in selling a middle market size apartment building, from your underwriting to my underwriting to another buyer's underwriting to the seller's underwriting to the lender's I mean, the cap rate is just it's such a moving target. So I think that if we're underwriting apples to apples, and something is stabilized in the consistent format that we usually present them to the marketplace, then I would say, yeah, we're between a 5 and a 6, depending on the submarket, depending on the quality of the real estate. We can sell much lower than that if there's significant upside to the deal. And then if something is more hairy or, not as attractive of a location or, whatever the reason is, you'll see it adjust up from there.
What would you say the average, not transaction dollar size, but number of doors, maybe is the average number of doors per sale that you work on? I mean, what does it look like in the Chicago market?
Yeah, last year was about 30 units. It was about $9 million. Over the course of my career, the average has been about $6 million, and call it 25-ish units.
Right, and that's going to be the standard kind of inventory size that you're working on.
Yeah, it's typically private capital. It's generally kind of that middle market space. I'd call between 8 units and 100 units in broad strokes, and then circumstantially slightly more, slightly less.
But that, I mean, in Chicago proper, that's basically what the inventory is, right? I mean, you're not going to run into those 200-300 multifamily 200-300 unit multifamily properties very often, I wouldn't imagine.
No, there's some high-rise product downtown that ends up trading more institutionally. That's not really my focus. We've done some larger deals than what I referenced, but it's not it's not what I'm selling 20 of a year. And then in the suburbs, you see more garden style deals, 2-3 story, kind of sprawling with the pool, with the clubhouse. That's more suburban product. My focus being more in the city, it ends up being more vintage or newer. We've got kind of 3 vintages of construction here. We've got like 20s-ish construction, 60s, 70s construction, then after 2000 construction, and walk up or elevator kind of mid-rise buildings. That's basically it.
What would you say are some maybe top 2 or 3 considerations somebody should take into account when looking at a market like Chicago? I mean, you're looking at, like you said, stock that could be up to 100 years old. There's got to be some nuances to investing in that type or that size of property. So what are some of those things that people should be thinking about as they consider this as an investment opportunity?
Yeah, the first place my head went with the answer to the question is more from operations rather than maintenance. I think Chicago being a major market with a landlord tenant ordinance, you have to, even if you're trying to be a good person, you have to know the rules. It's more than just kind of trying your best. You have to know the specific rules to operate in Chicago and abide by the specific notice provisions and handling of evictions and that sort of thing. So I think knowing or having an operational partner or management company, physically, the 20s construction buildings I feel like end up having sometimes fewer issues than the newer construction stuff. They've been stress tested for 100 years. The adage that they don't make them like that anymore, it ends up being pretty accurate. So I don't know, we versus some of the Sunbelt markets or Florida, we don't have the same I don't know, some of the same construction issues or the same like weather challenges. Insurance here is more reasonable in some of those markets. So physically, I think the buildings are pretty solid. It's more about being able to run them.
Right. No, that makes a lot of sense there. That's that doesn't surprise me that the 20s vintage stuff is potentially less maintenance work than some of the stuff that was built there in the 2000s. I think that's something really important there that you bring up, is just understanding, what the local regulations are and how you work inside of them. For somebody like me here in Tennessee, which is a very landlord-friendly state, even in Shelby County, where I'm in Memphis, Tennessee, there's more rules and regulations, but it's still pretty landlord-friendly. I mean, by and large, and not that we don't want to do right by our tenants, because we very much so want to, but we just don't have to jump through as many hoops as you do. I think it was interesting. I think it was in California. where when they started putting in rent control, it was actually kind of spearheaded by somebody that was one of the very, very large multifamily property owners, which is kind of counterintuitive. But in its own weird sort of way, like most regulation does, it builds a hedge kind of around what they're doing and kind of makes the game much more difficult for everybody else to get into. But with all that kind of preamble I put in there, is there opportunity inside of that where we say, hey, the game is now more difficult to play, so then that creates opportunity for people that actually want to get it and understand it?
Yeah, for sure. I mean, I think, rent control is a horrible policy measure by every standard that, I don't know how many case studies we need to see before, it stops being proposed as a measure to help tenants, because it does anything but,
Correct.
it will supply, anyway, we don't need to go off on that tangent. But yeah, I think as a market, a market that's challenging, I think weeds out some of the competition. If you're here and you're operating and you're doing it the right way for the long haul, I think it kind of puts up some barriers to entry that can provide a competitive advantage for those that can do it well. I think of it sometimes from brokerage standpoint, like I wish it was harder to get your brokerage license. I wish that there was more barrier entry in this space, because I hold myself to a high standard, and I wish the whole industry would be able to do that too. So I think if it's competitive and difficult to operate, there is the silver lining is that not everybody can do it. And so if you can and you can do it effectively, sometimes it's half the battle.
Absolutely, absolutely. Let's talk a little bit about you and your personal journey. You've been very niche focused, which is, I think, for most people, and myself included, a challenging thing to do. To find one thing, to stick with it, and just to master that. What have been some keys for you doing that?
Well, it hasn't been a perfect ride to do that. I think as you grow and as you have some success in doing it, the challenges or the shiny object is doing bigger deals. And what I found is that there's not as much sale velocity in those. Generally the institutional firms are set up a little bit differently in the way that they have teams and kind of handle the workload. And so I took my eye off the ball a little bit and kind of trying to chase some of those and realize it's not really the way for me to grow my business. I'd rather do more of the size that I'm doing. And, the deal size can kind of gradually work up. But it's been a competitive advantage because in brokerage, it's brokerage. There's a lot of good things about the job, but it is, it's not easy. And so I think as you have some success, you either are tempted in to do something different and more on the principal side, or at some point in the journey, you get tired of kind of the grind of having to feed the front of the pipeline. So one of my advantages has been, some attrition and competition, and just in general, like kind of doubling down of my focus on this space.
No, I think that's great. That's absolutely great. Yeah, and that's something that I do think is a struggle for all of us. But I'm always impressed with people that say, you know what, I've been doing this for a dozen years, 20 years, whatever it is, and this is exactly what I focus on.
Yeah.
It seems like by and large you've been able there to pull that off. Let's talk a little bit maybe. What I have some questions on. Oh, what's trading right now? I know you mentioned kind of unit size. Are there particular amenities that people want in Chicago? Are there certain building styles or types that you say, man, this is doing better than that? So if somebody's coming to Chicago and wants to invest, they should be looking at whatever it is, fill in the blank. Are there those types of things that we should be thinking about?
Yeah. So what's trading is call it 20, 15 to 20 to up to 50-ish unit product. In any north side market, in some of the south side markets, you see the same type of velocity. They're trading, they have a lot of different amenities, or they have, they can run the gamut of finish level and quality. But the common denominator is that they end up kind of lending well to the buyer pool of owner operating long-term investor. A lot of family offices or private individuals that have that end up kind of having consistent demand for that type of product. And they don't trade real frequently. I mean, a lot of those are held for decades prior to selling. So when they come up, regardless of what the conditions are in the market, the long-term holders in any given submarket end up being pretty territorial of the inventory. So if you can get the right type of, inventory, we're seeing really strong demand from that type of buyer pool. Amenity wise, I don't know that there's anything that's a particular hot button. I mean, it seems like individual HVAC, just given kind of the cost of utilities and offsetting that to the tenants, and then having in-unit laundry seem to be probably two, for different reasons, but two of the most desirable amenities to have. Say there's probably a slight preference towards more stabilized physically versus less, and that's changed a little bit over the course of the last few years, just given the Chicago permitting process has gotten embarrassingly slow, and the cost of construction obviously has gone up kind of everywhere, and here's no exception. So somebody can buy more physically stabilized and create some operational efficiencies or roll it into an existing portfolio. I'd say that product is more attractive than something that has a real heavy lift right now.
That's interesting. Yeah, I wouldn't have thought about that. But again, going back to the challenges that may be faced from the landlord tenant laws, the rules and those provisions, all those things, that could be a hurdle that maybe you wouldn't want to climb as a new investor coming into the city. So
yeah, and the lead time and giving the notice, and then getting the permitting and doing the work, I mean, it can be a longer cycle than a lot of people have the tolerance for. But over the course of the last few years, prior to the recent past, it's been like value add. I think it's easier to raise money for. There's some sort of pop kind of earlier on in the hold that creates some excitement for both sponsors and passive investors. And so, but I think there's just been some challenges in the way those get executed recently. We can still certainly sell them, and some of them are more attractive than others. But I'd say there's a bias probably towards more stabilized versus less right now.
right. No, that makes a lot of sense, especially if you're out of town investors. If you came to me, I'd certainly want to look at more stabilized assets than less. In the Chicago market. What you mentioned that owners tend to be territorial in the sense that they probably buy up as much as they can within a given area, and they hold them for a long time. I think that's a really compelling thesis for seller financing. You see any deals getting done at this point where they say, hey, look, we want to unload a portfolio. Seller financing is the way to do it. That way, I mean, do you see anything on that front happening, or is that something that's just kind of outside of the norm?
I'd say outside of the norm. Done a handful of them over the course of my career. I wouldn't say we've seen really in Chicago. I know that I'm reading about more getting done nationally as a solution to where the debt market has gone. But I'd say for the type of product that I reference, most sellers would say if they don't have to do that, they don't really want to do it. And not for everybody. Some people want to do it as as kind of a mechanism to create some more passive cash flow over the course of the next, or not realized capital gains, whatever the reason why somebody wants to do it.
Sure.
But I'd say there hasn't really been a significant uptick in it here, because the buyer pool that I was referencing, or that I have been referencing, still getting fairly attractive terms. There's still, kind of the sponsor of choice for most local banks. So like they're still getting pretty decent terms. And it's competitive on the buy side. So generally, like, unless it's something the seller's trying to do as kind of a segue into retirement, haven't seen a ton of them.
Got it. Okay, cool. No, that's awesome. Joe, here before we jump into the last segment of the show, we were learning how to get in touch with you. Is there anything else we should be thinking about as it pertains to Chicago, investing in Chicago, investing in multifamily, small multifamily in Chicago? Anything else come to mind you'd love to share with our audience?
I think Chicago is gotten some a bit of a bad rep in the news, and if you read the headlines, I think people that don't know it intimately could say I'd rather live or invest elsewhere. But Chicago is an incredibly well-rounded city. There's a job market where you could do anything in the world in Chicago. We've got incredible housing stock. We've got great nightlife, restaurants. We have geographic constraints into how the city can expand. So it's not easy to build here. In addition to the permitting and, the scarcity of land, it's just, we don't see supply grow much in Chicago. So right now we're in a gangbusters rental market when other areas of the country are, are seeing rents recede. And, it's not as bad as the news on the other fronts. It's not without challenges. I'm not being, Pollyannish about it, but, it's a great place to live. I believe in investing here and running my business here. I'm not going anywhere, and there's a lot of people like me who are going to be here for the long haul.
Yeah, I understand that, man. I absolutely love Chicago. A big fan of the city there. That's yeah. If you had to pick any city in the U.S. I wanted to go visit and spend a weekend in, it certainly would be Chicago. And I'm not just saying that. I really truly love going to Chicago. So it's always a good time. And it's kind of like Memphis. I mean, we get that bad rap too, where it's like, oh man, if all you do is read the newspapers, then I don't think any of us would ever leave our homes. So it's just kind of the way it goes. But Joe, appreciate you coming on the show today. If our listeners want to get in touch with you and learn more about you, what is the best way to do that?
Thanks for having me on, man. It's fun. My cell phone number is 312-848-6682. I work for a firm called Interra Realty, Interra Realty. I've got LinkedIn, Joe Smazal. I'm not super active on the other social media platforms, but pretty easy to get in touch. I'd be a bad broker if I was hard to get in touch with. So you want to get in touch with me, like there's not that many Joe Smazals running around. So it's easy enough to do so.
Fantastic, Joe. Thank you again for coming on the show today. We will include all of that information there in the show notes. So look for that if you want to get in touch with Joe. Joe, thank you again. Have a great rest of your day.
Thanks, Matt. You too.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen. If you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.